So we'll
Mark,
just open the floor.
we have a comment from Chuck Brunell. Chuck, you're unmuted. Go ahead.
It's a question, Mark. It was about your projected PEs. Do you want to see that high, low? Is that a contrarian thing, or what are you looking at when you're looking at it on your dashboard?
Well, good question, Chuck. Thanks. It's obviously a component of the projected annual return, so it's a piece of that puzzle. I'll tell you the way I kind of look at it. Let's go back to actually look at one of the pages. Here's kind of the way I look at it, and this is a little bit different. Let's say I'm doing a study of adding either hogs or DLB to a portfolio, Chuck, and I see that that's roughly the same return. We're talking mid-teens, and the way I like to think of it, in order to generate that result, Dolby Labs has to achieve a PE of 23, while Zhongpin only has to achieve a PE of 11. It's kind of like a high jumper with a lower bar, if you want to think of it that way. Now, obviously, you have to bring to the consideration the type of companies we're talking about, whether it's technology or food or energy or whatever, and what normal PEs are, and dig a little bit deeper. But again, for a company like Zhongpin, depending on what their historical PE profile looks like, that could actually be like a tiebreaker for me. So yeah, it can be a little bit of a contrarian moment. I mean, by that same token, I know people in our community are interested in Tower Group only having to get to a PE of 9 to generate a return of 13. So there's another example right on the list.
Mark, we have a question. We have a question from Ron, Mark. Ron wants to know, when PAR goes into the yellow zone, do you take pause that things might be too good to be true?
Absolutely. That's why it's yellow. We do consider that to be a warning signal. In many cases, it's a situation where if you just wait a little bit, another shoe might drop. So yeah, it's definitely a place where you want to check your figures, check to make sure that the analysts, or rhinos as we call them, aren't completely out of this league. Yeah, it's exactly what it's supposed to be. You're supposed to pause and think about it, make sure, double check, be extra careful.
Mark, Chuck has a follow-up question. Chuck, you're unmuted.
Hi, Mark. Back to the PEs again. When you're looking at your whole dashboard and you're going across the bottom looking at it, is there something you're shooting for PE-wise, or is it just your tiebreaker?
No, Ken may have an expansion on this. I do not actually shoot for anything other than I really would like that to be in a normal range. What's normal? 15, 20, depending on how frisky you want to be. I mean, if I'm out there and I've got a company with a projected PE of 30 or higher, I want to balance that with a company that has a PE of 10, 12. So it's all about balance. So if I bought too many of those friskier companies, that average PE would, for the portfolio, would go too high, and you'd probably notice it in other ways, but that's generally how I think of the average PE for the portfolio.
Chuck, the last time I worried about portfolio PE when I visited a group of people in a club situation was way back in 1999 when I visited a club in Saginaw when we were doing a lot of this stuff by hand at that point, and their club PE was over 40. Their portfolio was full of high-tech stocks, .com stocks, and they were making lots and lots and lots of money. And you all know where that led, what that led to. Usually nowadays when I visit club portfolios, Mark's exactly right. You almost always see their portfolio somewhere in that normal range as far as PE is concerned, and I'd say somewhere between 14 and 18, 14 and 20, something like that, is what I'd consider to be normal.
Okay, thank you.
Mark, we have a question from excuse me, from Maryland. She'd like you to review again where you find the low value line total return number.
Okay. We also might make sure that the Beardstown ladies, I see they're still online and meeting at Faye's place, so if they've got any comments or questions, they might go ahead and enter that in the question box if they have any comments. Let me go ahead and jump out of here. If I can get control of my laptop. And then what I'd like to do is just kind of ramp on over to value line. We'll just do a quick reminder. And I am at the value line page. Let me see if I can remind myself where they keep the free ones. Here they are. The free value line reports for the Dow 30. Then let's see if we can identify one that's in the ladies' portfolio. We can actually pick any one of them, but I was hoping to try to remember. Well, let's look at Caterpillar. It's a good Central Illinois stock. And what I'll do here is bump it up. And what we're talking about in the case of Caterpillar is right here. The low total return forecast for any company is what I've highlighted there. And in this case, Caterpillar has had one heck of a run. The stock price is up significantly from where it was during the Great Recession. And as a result of that, they actually have a low forecast of -2. So if I'm at Manifest, I would not be the least bit surprised to see a projected annual return in the low single digits for Caterpillar. So that's where you find it for any company. And again, I kind of use that. If you want more on that subject, go back to our cover story. Oh boy, it's back around the time when I visited the Beardstown ladies, so it'd be back in autumn of last year, and read about how we did some research into the low total return forecasts from Value Line and how we use that.
Mark, we lost our engineer this evening, Dan Horanek, and Dan lost his connection to the webinar about 45 minutes into the webinar. If anybody else is recording this webinar,
I've got it, Ken.
Dan would like the recording sent to him. So Laurie's going to send a recording. If any of the attendees have a recording, if you could send it to Mark, he'll see that Dan gets it. Mark, we also have a question from Don. Don says, in reviewing some forum questions from 2010, there was a question about manifest investing updating to a newer version. Is this update still in the works, and when could we expect it?
Oh, they're talking about the website rollout?
I think so,
Well, Kurt is principally done. I know we're actually getting together on Thursday to talk about the alpha, so we're going to basically put that out there pretty soon for everybody to test. And again, we're going to meet about it Thursday, so hopefully it'll be out. There's a small group that have tested it pre-alpha and allows us to do some interesting things with our portfolio, so we look forward to having that. Thanks for the question, Don. Oh, Ken's rounding up any other questions. I do want to just make a point that you can find either in the Manifest forum or on the Manifest Facebook page access to the events, and we will be accepting groundhog stock selections. Again, all you have to do is submit 5 tickers to me to be part of that for this year. And we do have a roundtable coming up on a Saturday morning, Saturday, February 26th at 11 a.m. That's 11 a.m. Eastern time. So it's not too brutal for people on the West Coast. And Ken and I will be getting together with a bunch of our colleagues in Ann Arbor for that conference on March 25th. Did you want to comment to that, Ken?
Yeah, we have a BERT coming up. 6 Better Investing chapters are combining to put on a wonderful day-and-a-half conference, March 25th and 26th in Ann Arbor. Email me if you'd like more information, or go to the Mid-Michigan page on the Better Investing website. Mark, we have a question from Eric. He's nudging you, reminding you that you were going to tell them a little bit about our pets.
Oh, okay. We'll come back and do that. And in fact, that's another good segue because I'm already looking forward to the ladies in the local chapter down in Central Illinois, known as the Heart of Illinois chapter for NEIC, have invited me to come down and spend Friday and Saturday, and that'll be on September 9th and 10th in Springfield. So I know many of the Beardstown ladies will be there. If you're inclined to visit Springfield, Illinois, you could go to the new Lincoln Museum sometime that weekend, and it'll be quite a good time. So if you're within driving distance of Springfield, Illinois, September 9th and 10th, this coming September, come on down and see us down there. And
Mark, we are getting a comment from Faye and the Beardstown ladies. Faye is saying, "Thank you, Mark. We will be looking at your suggestions." So I don't know, Mark, if Faye is patting you on the head and saying thank you, and we'll kind of take a look at them, or what. But they were listening, Mark. All right.
You know, it's probably time for me to reinforce my this is just one of the rules I live by. I don't think any investment club should use violence in its methods and techniques. You know, and now Betty is down there saying, "See, I told you we should be taking a look at our pets. If any of those other ladies have wrestled her to the floor and are hurting her, that would be wrong. That would just be wrong. No, a little bit more on our pets." When I attended that meeting back in October last year, and they were kind of reading down, you know, they're going through the typical investment club process, and they're reading, you know, down their companies and making comments and things, and they made some comment almost like under their breath about our pets. And I thought that they were referring to some company that they just didn't even want to talk about by name anymore. And I didn't find out until after I left the meeting that they were actually talking about the specific name of a company, our pets. And you can see the ticker symbol there, OPCO. Now it's a tiny company with I believe about $15 million in sales. And we do cover the company. It's part of the Manifest universe. So you can actually pull it up and take a look at it on Manifest. We'll do that right now. But it's an example of a company that was discovered. Betty told me that it was discovered during an investor fair a few years ago where the company actually presented. And again, it's in obviously the pet services business, and very small company trading at around $1. And they just kind of said, let's take a whim and speculate with a small part of our portfolio. You know, and my point is, it's, you know, such a tiny part of the portfolio, they probably ought to either make the decision to go ahead with it or, you know, dismiss it at this point. And Betty Sinnach tells me that recently the company was actually being kind of held back by some litigation, and they were successful. They were the successful party in the litigation fairly recently, so it probably merits an even closer look. So, you know, fairly rapid growth. I assume it's smaller version of a pet store supplier, and you can learn more about them by going to ourpets.com. But again, the point I like to make is they discovered this company at one of these investor fair opportunities put on by the Heart of Illinois chapter, and this is an example of a company that you can get very, very close to, and you know, watch for these type of opportunities. You've heard us talk about Neogen in the Michigan area and a couple other companies like that. So our pets is a worthy study. You'll be kind of stunned when you look at your visual analysis. You have to build it manually because it's not available in any of the data feeds. But build your stock study manually, and it looks pretty good in terms of, you know, fairly long-term stable results, even though you're dealing with very small numbers. So
Mark,
thanks for the nudge.
Mark, we're getting a question from Laura. She wants to know what the OB stands for at the end of the Our Pets ticker.
That stands for some form of a bulletin board. So it means it's not on any of the major exchanges, not on the New York, not on the NASDAQ. It's on a form of the NASDAQ probably, but it stands for one of the bulletin board exchanges. So think of it as a pink sheet stock. But again, as you heard me say, the ladies knew when they got into this, they were into a area of a little bit of speculation. And there's nothing wrong with that, as long as you know what you're doing when you do it. It's kind of interesting if the ladies know what their cost basis is in that, because they probably have a gain.
Mark, we have a comment from Herb Lemkel. Herb, you're unmuted.
Yeah, what I'd like to see you do, Mark, is pull down the food processing and do a comparison to see what other companies are in that area?
I'll switch to the industry.
Yeah, yeah.
Okay. Okay, and they're not very highly ranked. By the way, when we sort this by quality, this question came up earlier. Any one of our displays, you can click on the header and it'll sort it by quality now. You'll see that they're not very high. They're down here. But during the current update that we're going through right now, the current batch at Manifest, our pets actually qualifies to have enough track record that we will begin tracking the earnings per share stability, and that raises the quality rating from 41 to 59 on this company. Just the fact that they have now been around long enough that we have sufficient data to actually give them an earnings per share stability rating. So something to always be thinking about when you're dealing with some of the smaller companies, especially when you identify one that appears to have significant strength, but it just doesn't have the quality that you think that it might ultimately have. And again, I think we all have to raise our right hand and say, yeah, we're playing with fire anytime we're in this type of zone. Did this make the point for you, Herb, as to what you can show from the industry page?
Yeah, I think it was rather interesting because now you look at that, and here's Hogs sitting in there, and Lifeway Foods, which is one of the other companies that we had looked at in the past, and Sara Lee, which is a Traverse City company. So, when you start looking at all these companies that they're competing against, that does look, when you got, that kind of par value, and if your quality's there, and also if you look at the growth, that's a pretty good growth rate.
Mm-hmm. And of course, we would demand that from a company that small, that type of growth rate.
I'm surprised it's that small.
Yeah. Well, they're feeding all the basset hounds.
Mm-hmm.
Anybody else can? Thanks, Herb. We typically try to run these.
Mark, Faye is making a comment. She says, now we can find the information on our pets on the internet. So they're using the internet to get a lot of their information about this company also.
Yeah, it's got a cool website. I mean, I don't recommend the people that love pets go here because you'll run out and buy a pet. When you go to their website, I told my wife and daughter for years, don't go into those stores, don't visit that humane society, and suddenly one day I have a grandpuppy. And these guys have a pretty cool site. I mean, from their investors to their product line, you can see what I mean. So you can find a lot of information. You can read up on what Betty advised us about on the litigation, and you can take a closer look.
Mark, I think it's also important to stress that the Beardstown ladies have a lot of experience and a fairly hefty-sized portfolio, and that if you're in the beginnings of your club, or if your club's portfolio is relatively small, filling it with good, solid, high-quality stocks is probably priority number one before you go searching for these kind of companies.
Absolutely, and they would certainly second that. And I intentionally didn't go into some of the more experienced areas that they are now into, the covered call strategies and stuff. I may actually try to twist their arms, and even though I don't do violence, to come back in 6 or months or a year and maybe talk in greater detail about some of the discoveries that they've made about their covered calls and that type of stuff that they're working with their broker Homer on. And because some of you had written to me following that story I wrote last autumn about the fact that they stay young by continuing to explore this type of stuff, and I just think it's so cool. And I certainly covered that in that story. But that is also an area that I don't think you want to do, as Ken was saying. Job one is stock your portfolio with core stuff. No doubt about it.
Mark, the question log is clear right now, and we have no hands up in the air.
Okay. Well, we'll hold for a couple more questions just in case. I do also want to make the point that for those of you that are out there listening, engaged with investment clubs, this has proven to be a very popular offer that we're making. We refer to it as all-you-can-eat manifest investing. Again, I'm not here to hard sell you, but one of the things that we've discovered is that clubs can really use Manifest and Vivio to really optimize their process. And with this special offer, we offer Manifest investing for every single member of your club, whether you've got 4 people in your club or 24 people in your club, for a total price of $169 for an exclusive one-time offer of 1 year. So if you want to know more about that, send me an email, or and I can give you more information about it. But clubs are discovering that it can be a fascinating place to lean on for research and resources. Okay, so the question queue is empty. We generally try to end these presentations within 75 minutes, a little time for Q&A. Again, I want to reach out and give a shout out to the Beardstown ladies again, and just say thank all of you for what you've been as an influence and inspiration in our lives. And as I said to everybody, we'll post this presentation with a YouTube capable video on the Facebook page, and we'll put the PowerPoint in the Manifest forum. But I want to invite anybody to share any Beardstown ladies story that they care to do so, either in our forum or on the Facebook page going forward. So with that, we'll just say everybody enjoy the rest of your Valentine's week, and we look forward to seeing all of you Saturday morning, February 26th, when Cy Lynch, Hugh McManus, Ken Travula, and I come together and talk about our favorite opportunities at the end of February. So with that, thanks for coming tonight, guys, and take care out there, everybody.
Thanks, everybody.